Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis, technical analysis over on First Republic Bank, ticker FRC. Now, just before we start this analysis, I do kind of want to put a bit of a disclosure out here because this is going to be one of the trades I'm most likely going to do myself. Obviously we do analysis on this a lot. Usually the audience wants more small caps, which I don't really trade myself. So again, there's not usually much bias because I'm not going to take a position myself. But on this First Republic Bank, I am most likely going to trade this myself. So just want to put that out there just so you know watching this. But anyway, what we can see today, we're down near enough 30% on the day, or gapped from yesterday. So if you can see that, you can obviously see the zoom out. But we are also hitting close to that recent low. So if we go to the longer term charts, on the left we have a 6-month, on the right we have the 1 year. What you can see is obviously when we had the news before, we moved down to about 1750. Today we went down to about 1850, but you know, we will most likely continue down. So you're going to see some orders out here. Again, this is if it comes down to these kind of levels, then this is where I'll be getting in some trades, which I will explain going later into the video. But firstly, we'll just go over the key levels. So if we're over on the 1 year chart, and again, this is usually the stronger chart of the two, we can see we are below all reasonable levels. So $25, that is our fourth deviation. Usually we don't even trade off of this level because it's just very rare that it even gets hit. But we can see the first time we came down to it, we hit it, we got our bounce, we retested this deviation, and now we're continuing down. So really I'm just waiting for that break of the low, which is most likely going to happen. And then this is where I'm hitting in with some option contracts. So 25 is a now resistance. We also have that 46 as resistance, and we also have that 49 as a resistance. These two are quite close. I'll be using them as a zone of resistance. We also have 23. It looks like 23 something. 20. Messing up a bit because it's very close to the current price action. So it's 22.95. So between these kind of two levels, again, I would be using them as a zone just because considering how volatile the stock, even though it's a $2 difference, when a stock's this volatile, it's going to need the wider range. So these are our kind of two closest resistance. The only support we have is a negative number now. So again, this is another reason why I'm quite liking this to the upside, because again, this is more of a reaction of Silicon Valley Bank. So yes, obviously there is obviously some risk with First Republic Bank. But overall, it's more what I would imagine is more of an overreaction. And that's why I quite like the trade idea on this. Because as well, even if it isn't an overreaction, what you'll probably see, even if these orders execute coming down here, we'll probably still get a bounce like here. You know, we still get those massive bounces. And that's usually what happens when these stocks fall off so much. You will tend to at least even just get small bounces in them just because obviously people will be buying into them. Or if people are holding short, you know, they're locking in profits. Or again, if they're long, they might be cutting losses. So you do tend to still get these bounces even if the stocks are quite volatile to the downside. And that's what I'm quite liking the trade plan coming into this. So again, from a support side, we don't really have any. And that's why the main reason I'm looking to execute is just when the premiums get cheap. So if the premiums come down, again, this is where it says the price needs to be for them to fill. They probably won't actually need to go that low. It's probably just if it starts reversing more in the intraday chart. So obviously we bounced a bit. I could expect the move maybe to 23, and then if we start to get a bit of a pullback, I could see them executing around $20, 21. Because again, don't forget, when stocks are this volatile, the stock doesn't have to go as low for the premium to get that low again. So it probably won't have to hit that actual daily low to hit those premiums. So again, those are resistances, and they're also going to be targets. The way I'm going to be trading this is if they do end up executing, you know, I'm going to be locking in quite a big amount of the profit coming into around that $40-$45. And the reason for that is, again, if it's just a temporary bounce, I don't want to be turning a winner into a loser. So I'll be locking in some profits, but I'm obviously going to be holding some for a bit more of a home run trade because, again, this could bounce and it could bounce heavy. So I want some size in there. And if I can get the premiums relatively cheap, you know, the more I will hold. If we do go further, we do have more resistances at 68 to 75. Now, this is a bit wider, so up to you if you want to use it as a zone. If I'm a day trader, not a zone. If I'm a swing trader, potentially a zone. And then, you know, the final levels that I'd pay any attention to is the $90 and 100. 100 is where I would completely stop paying attention to resistances because this is what is considered fair value statistical mean on the longer term chart. Now, obviously, reversing from there to there is probably not going to happen because, you know, that's about a 400% move anyway. but obviously off this kind of news, you don't expect it to reverse fully, and that's why I'm paying more attention to kind of this $45 level and potentially the 68, but I still think that's quite far off. So that will probably just be, again, I'll lock in a good amount of profit coming into here, have my stop from break even from this level, and then if it continues to push higher, again, I'll probably just lock in profits as it runs, but I probably won't have set targets if it continues past here. So, I mean, that is kind of the technical breakdown on what I'm looking at on the stock. Now, I said I'm going to trade it. So sometimes I like going through the trade plans if it's going to be a bit different to how I normally trade it. And this one is going to be a bit different because usually we talk about doing only really credit or debit spreads when they become, overbought or oversold. And the reason for that is I do like the strategy. It's a one-to-one risk to reward. And it is something I will be trading over on First Republic Bank, but not the only way I'm going to be trading it. But it is basically just a one-to-one risk to reward. And we could say, the stock is going to be above $25 in, say, a month's time. I know the probability is it's more likely to be above that than not be above that in that time. So to me, a one-to-one risk to reward on that makes a lot of sense. So that's one way I'll be looking to trade it. And again, so that's really just using the option chains, having a credit or debit spread placing off that. But what I'm also looking at, and it's not something I usually do too often because it depends on the premiums, but we can already see the implied volatility is starting to decrease over on these, which obviously 190% is still quite high. But considering the kind of move I would still expect on this stock, it's definitely a risk I'm willing to take. But it's really just buying outright calls, and that's the main thing I'm doing. So the main one I'm looking at, I think, is this August one. So if we make this chart a bit bigger, so the 18th of August, again, all I'm really looking for is if it can push down to kind of this intraday low. I mean, I would have got it at the open, so I was about 10-15 minutes late to the computer, which was quite annoying. So I also missed the SPX trade that I usually get most days. But if it does come down to this kind of level, again, if we're buying at these kind of lows, I'm happy to take that kind of risk because, per contract, I'm taking a max risk of 350. I mean, I can easily take that risk, but the upside is great. I mean, you think even within this, within 15 minutes, it was already up near enough 100%. So taking on a trade like that when, I'll be expecting to hold it for just literally a day or two. And then, the rest I'll hold a bit longer. But that would be the main breakdown. And I mean, I think to me it just seems like quite a low risk play, and that's why I'm looking to play it like this. Again, I'll probably hit in with some credit and debit spreads, or probably going on to the credit because the premiums are elevated. But either way, looking to trade it through that. But this is kind of more of a bonus, also trading it through just the outrights, which again, I said I don't do all that often, but in this case, I think it makes a lot more sense than it doesn't. So anyway, let me know in the comments, are you trading any of these banking stocks, especially First Republic Bank, considering it's probably the most volatile of them all right now? And yeah, let me know if you got any trading plans. Is your trading plan kind of different to what I'm doing? Are you looking to just buy shares, or are you looking to trade it through options? Otherwise, if you enjoyed the video, why not drop a like and subscribe and check out this analysis video.